Okay, let's get back home. It's been 2 years and 9 days since May 29, 2023, when President Bola Ahmed Tinubu was sworn in as the new president for Nigeria, whose twin reforms of fuel subsidy removal and exchange rate realignment now stands as the poster boys of his administration so far. So let's take these twin reforms and other monetary and market reforms to discuss the impact that the administration has made on investors at midterm. Joining me for this insight is Chukwu. He's a licensed market professional and the group CEO at Cowrie Asset Management. A good holiday Monday evening to you, sir. We thank you for making time, as always, on DRS Exchange here. Good evening to you, sir. It's a holiday Monday evening here in Lagos. Thank you so much. We appreciate making the time to be on the program.
Good evening, boss, and thank you for having me.
Yeah, thank you so much. We appreciate it. So let's kick off this conversation of President Tinubu's midterm review from central banking and monetary policy angle. What are the facts and figures in your perspectives over the past 2 years?
Well, boss, if you look at the monetary, the central bank, and the financial market in the past 2 years, one would say it's been a mixed development. If you start from the central bank, we've seen a very active central bank. We saw a central bank that increased the capital base of banks to 200 billion for national bank, 500 billion for international banks or banks with international operation, and then 50 billion for regional banks. We've also seen central bank that have been very active in managing the monetary policies, particularly as it relates to exchange rate management. We saw a central bank that's consistently increased or increased rates on treasury bills so as to generate foreign capital inflow, foreign portfolio inflows to stabilize the exchange rate. That's on the monetary side. Then, as it relates to the financial market, looking at the capital market, we saw a market that in 2023 gained 45.9% and in 2024 gained 37.65%. Even to date, we have seen a gain about 11.3%. So we've seen a consistent, very strong performance in the financial market, particularly the equities market. On the bond side, we've also seen yield increase significantly because of the increase in yield on treasury bills. We've seen yield on federal government debt instruments increase to the region of 19%, 19.75%. But what we must recognize is that we've seen a lot of borrowing from the government, partly to finance budget deficit and partly to stabilize the exchange rate as a way of issuance of OMO instruments as well as treasury-based instruments.
Okay.
Last year, total federal government borrowing from the financial system was about 31 trillion.
Okay, I want us to just take this a bit sequential in terms of when you talk about the market performance under any administration. I'm sure the central bank is usually number one. If you look at the equity index, everyone will say, look, considering where we're coming from, we say the central bank is central to everything. And of course, Mr. President also went in to announce, to speak about the normalization of exchange rate and all of that. So that came just as Cardoso came in late toward the end of 2023. So the financial market regulator, would you say the central bank under Cardoso and the rest of his team, the deputy governors, the MPC, do you think they've given a good account of themselves as the market, as the financial regulator and the central banker for the markets under this administration? 2 years.
Yes, Bosin, to answer that question, I have to put it in the context. Remember, the primary role of the central bank is to maintain price stability. And the price stability, you're looking at the exchange rate, interest rate, and CPI, that is Consumer Price Index. In terms of exchange rate, we've seen the central bank actively, like I said earlier, actively intervening in the market, raising foreign portfolio inflows to help stabilize the exchange rate. But in spite of that, we've still seen depreciation of the exchange rate. We've seen Naira depreciate from the region of 430 Naira prior to the advent of this government and about 725 Naira at the parallel market to about 907 Naira at the end of 2007 and about 1,260 Naira at the parallel market at the end of 2023. Then we saw that also move up again. We saw exchange rate in the region of 1,583 Naira at the official window and about 1,670 naira parallel market window at the end of 2024. So, despite the central bank's efforts, which we cannot take away from them, one will say that, look, without those interventions, probably we'll be dealing with a worst-case scenario. But one would certainly give them credit for being quite active in intervening to stabilize exchange rate. The other price matrix you have to judge is the inflation rate. We saw inflation rate averaging about 34.18% in 2024, in spite of the interventions by the central bank to mop up liquidity from the system, to suck out liquidity from the system by way of issuance of short-dated instruments. Then the other aspect is interest rates. Of course, we saw part of the efforts to stabilize the exchange rate as well as bring down consumer price index or inflation was central bank increased the MPR rate by 8.75%, from 18.75% to about 27.5% last year. So all this, one would say that central bank is playing its role, but it's contending with other factors. Most of it structural deficiency in the economy, as well as part of the fallout, or we call spillover from fiscal authorities' actions.
So we look back at 2 years of exchange rate normalization. How has it hit for local investors and their portfolios? Love it, hate it?
Well, for portfolio investors, local portfolio investors, I think, when I was talking about the performance of the capital market, one would say the local investors have actually smiled to the bank. In 2024, the market gained about the capital gain was about 28 trillion naira. We saw the market that gained, and I mentioned earlier, at 10.65% last year, and a cumulative capital gain about 28 trillion naira. So portfolio investors would say, I would say they are smiling home to the banks. We've also seen high increase in yield in short-dated instruments. So for those even investing in all assets, across all assets, be it equities, be it treasury bills, be it bonds, one would have enjoyed a reasonable level of return on investment. If you consider that I said earlier that average inflation rate last year was 34.18%, but capital market gained at 7.65%. So an investor in the equities market on the basket of instruments on the equities market had actually performed the inflation rate last year. We saw treasury bills in November go as high as the auction rate or discount rate as high as 3.5% in November last year. So investors that had also invested in treasury bills would have made some reasonable level of return. So for portfolio investors, I would say that most of them are not worse off. If you have invested wisely, you would have actually outperformed both inflation rate and the GDP growth rate.
Okay, so, but for low-quoted companies, the FX rate normalization resulted in naira devaluation. So, how did that work out in terms of how did they deal with that 2 years on?
Well, it depends on 2 years on. We've seen for those in the financial services industry, particularly the banks, they were smiling home to the bank, to their banks, as we say, they are banks, because we saw that the banks logged in a lot of exchange gains to the extent that the federal government had to come and want to impose tax on those exchange gains. For the manufacturing sectors, who had actually gapped their books negatively, that means they had actually borrowed a foreign currency and invested in local currencies. So we saw huge exchange losses. So we have companies on the two sides. One, those financial institutions, particularly the banks that made a lot of capital gains, and then the manufacturers and the lease sector operators, the likes of the telco operators, logged in a lot of losses. The manufacturing companies logged a lot of exchange losses. And I think what we are seeing is that in the beginning of this year, we have seen some level of stability, and we don't think the losses that they suffered in 2023 and 2024 will repeat in 2025. So we may be looking at some level of normalization in 2025.
Okay, let's get more deeper into the capital markets, President Tinubu signed the new ISA, the Investment and Securities Act 2025, with speed, onboarding a new and robust legislation for the NCA. But that's a win for the government at midterm, you think?
Yes, absolutely. Any improvement in the regulatory framework is a win for the government, a win for the market, a win for the economy. So, and bear in mind that one of the things that has always lacked is ability of the legal framework and regulatory framework to be in tandem or to catch up with market practices. Everywhere in the world, market practices always outpace regulation, but if regulation is alive to its responsibility, all they just need is ensure that the regulations are revised, laws are revised to catch up with market development. Today, we are talking of cryptocurrencies. 10 years ago, it wasn't there. We are talking of digital coins. 10 years ago, it wasn't there. And this regulation is going to bring those into play and ensure that we have a regulatory framework that can regulate all asset classes that are tradable in the country and in line or in tandem with global best practices.
Okay, so let's talk a little bit about key developments in the public debt market. You mentioned a few about that. I'm sure for the last 2 years, or the 2 years of President Tinubu's administration, the Ministry of Finance and the Debt Management Office were the ones at the forefront of the public debt market. How do you score the administration if you look at the performance of the MOF and the DMO?
Well, if you look at what they have done, these are agents of government. Their job is to execute government mandates. We've seen some level of increase in our national debt, but basically their job is to ensure that we do not have, government does not borrow excessively. I think the government has said that they've exited the ways and means borrowing, which for me was necessary because it gave the government latitude or leeway to just spend money anyhow. So having exited that, it then means that government body is now a lot more structured. I mean, last week or last 2 weeks, the government issued about 300 billion naira of a Chukwu bond. We've seen government come to the market regularly to raise local currency bond. We saw the government raise about 2 billion naira from the capital market from the Eurobond issuance towards the end of last year. So in terms of organizational structure around our borrowing, I would say the debt management office has been on top of their game. But what one has to also recognize that the level of borrowing has increased significantly. We saw national debt at about 144 trillion naira, $94 billion, an increase from a low of as low as, I think it was about even the preceding quarter, we saw an increase between the last third quarter and the second quarter of more than $2.75 billion in terms of government borrowing. I mean, between the third quarter and fourth quarter, at the end of December last year, we saw a national debt I mentioned about 144 trillion naira and $94 billion equivalent. So we've also seen an increase in borrowing, principally because government is dealing with shortfall in revenue, and government has also tried to use foreign currency inflows to stabilize the exchange rate and limit the macroeconomic instability that we saw in the recent past.
Yeah, well, one of the things that we've seen was the government, part of what's just shown up on the screen, was the return to the Eurobond market. The government is also planning to come back to the green bond market with about 300 billion, roughly 180 million US dollars. We've also seen Sukuk bond flotation in excess of 1 trillion naira. So would you say that the public debt, locally at least, give something new to bite for investors over the past 2 years, midterm of Tinubu's administration?
Yeah, if you look at the public debt, I had mentioned that in terms of return on all asset classes in the country, we've seen a major uptick in yield. And what you have to recognize is that investors are looking for opportunities to invest, particularly local investors. If you look at what happened in the bid for the Sukuk bond you just mentioned, I think the bid was oversubscribed to the tune of 2 trillion naira, while as amount of on offer was about 300 billion naira. That will show you that investors are actually hurting for yield. And effective yield on that on that Sukuk bond was about, I think, 19.75%. So investors are out there seeking for yields, particularly local investors. Foreign investors have to consider a lot of things, the currency stability. And of course, we've seen in the current year some level of stability in the exchange rate. Apart from the depreciation we saw when Donald Trump announced his new policy on tariffs, I think 2nd of April, we've seen Naira stabilize. Like I said earlier, the Naira opened this year at about 1,583 Naira at the parallel market. As at the close of business on Friday, I think it closed about 1,580 Naira, which is basically saying that if you consider closing figures at Thursday and opening figures at the beginning of this year, the Naira has remained relatively stable. Of course, there were a lot of gyration along the way, along the period, but we are seeing stability. And that affects the interest of foreign portfolio investors to invest in local currency assets of any currency, any country. So we've seen government bond, government issuance of debt instruments attract foreign portfolio investors who are relatively assured that the Naira will remain relatively stable and that if there's any depreciation in local currency, it will not outstrip the capital gain they will, or returns they will make on such investments.
Okay, let's come back to the fuel subsidy and FX normalization reform. What's been their impact on financial assets that investors hold, whether bonds, equities, or even pension funds? If you put this together, how would you think? How do you think portfolios have actually performed? Do you think they've really impacted on them, and how?
Yeah, person. If you look at how the portfolios had performed or the instruments had performed as a result of the policy, particularly the fuel subsidy removal. What happened was when fuel subsidy was removed, it signposted for private sector investors a liberalization of the economy. It signposted a private sector driven orientation. It also meant that investors expected that the leakages associated with fuel subsidy would have been eliminated and we're going to have a stronger fiscal framework. So the market reacted positively, which was why in 2023, I mentioned earlier that the market gained, the equities market gained 45.9%. And bear in mind that the performance of the equity market is a barometer to measure the level of optimism of investors in the economy, in that particular economy. If you look at January last year, the market gained 35.28% in January last year. January alone. But overall, at the end of the year, the market gained only 37.65%. So the market gained an additional 2.4% between February and December last year. What was that? Because on treasury-based instruments, and investors began to adjust their portfolios away from equities down to fixed income instruments, particularly short-dated treasury-based instruments. So investors are always looking for what would government policies indicate, what is the direction of government policies. So clearly, the issue of removal of subsidy incentivized or excited investors, and we saw a lot of investment in Nigerian local currency debt instruments. We saw a lot of investment in Nigerian equity instruments, which is why, like I said, we saw a consistent gain in the past 2 years on equities market.
All right. Well, thank you for that very robust review of the markets at midterm under President Tinubu's administration. Thank you so much. Enjoy the rest of the holiday Monday evening, sir. We appreciate that. Thank you. Johnson Chukwu, the Group CEO at Cowrie Asset Management.